Welcome to Examination Techniques in D3 Business Taxation. To make the presentation, my name is Chitambo Mwape. We'll look at the following areas, or the presentation will cover the following areas. We'll start by looking at the general competences required by candidates sitting for this particular paper. From there, we'll look at some common weaknesses which students sitting for this paper usually make, which results in poor performance. And we'll end the presentation by looking at some exam answering techniques which will ensure success when you are sitting for this particular paper. We start by looking at the general competences expected in a candidate sitting for this particular paper. Now, what you need to understand is that the D3 syllabus builds on the knowledge which you acquired in C4 direct taxes, and it has 4 core topics which you need to know thoroughly well if you are going to do well in this particular paper. So you need to know how to compute tax liabilities for sole traders and partnerships. You should be able to handle tax computation of tax liabilities for companies engaged in mining operations. You should also be able to deal with tax liabilities for companies engaged in farming. Then, one other core topic is the taxation of consolidated groups. Then you should also be able to deal with financial arrangements. So those are the 6 core areas of the D3 syllabus. Then, what are the learning outcomes? What will the examiner be testing you on? So, like I've already said, you should be able to handle the taxation of sole traders, partnerships, mining operations. Apart from that, you should also be able to calculate and account for VAT, customs and excise duties. You should also be able to discuss the taxation implications of various financial arrangements. And lastly, the other key competence that is expected of a student taking this particular paper is to be able to discuss the tax treatment of liquidations and insolvency. Now, let us look at some of the general weaknesses which candidates normally demonstrate when sitting for this particular paper. So we'll first of all look at the general weaknesses, then we'll go topic by topic to discuss the most common types of weaknesses which are demonstrated by candidates or students sitting for this particular paper. So let us look first of all just at the general weaknesses. So one of the weaknesses is that students normally demonstrate a lack of basic knowledge of taxation principles applying to different types of business entities. Okay? Like I've said, the paper builds up on the knowledge you acquired in the C4 taxation paper, such that if you have forgotten those basic principles, you won't be able to perform well in this particular paper. So you are expected to come forward or to bring forward that knowledge which you acquired in the lower paper, C4 taxation. Another weakness is that students normally fail to apply taxation principles that relate to the taxation of different types of businesses. Candidates also use wrong tax rates when computing tax liabilities for different types of taxpayers. So, for example, you'll find that a student, when dealing with an individual, will be using a company income tax rate of 35% instead of applying the tax rate, the graduated tax rates, which we normally use to tax individuals. Other students show lack of knowledge of the taxation implications of various financial arrangements. Whilst other students, they just demonstrate poor examination technique, poor time management, poor handwriting, poor presentation, as well as not even indicating the question, the number of the question they are attempting. Okay, what are the major issues then candidates face when they are dealing with taxation liabilities for individuals, businesses and companies? So some of the major weaknesses are that when computing taxable business profits for a sole trader, a partnership or a company, students normally fail to distinguish between allowable expenditure from disallowed expenditure. That is a basic taxation principle which every student is expected to be able to demonstrate. A student dealing with this paper is expected to be able to demonstrate what is allowable and what is not allowable for taxation purpose. Students also fail to compute the correct amounts of capital allowances when computing taxable business profits. Specifically, when it comes to computing capital allowances, some of the challenges which students face is that they use the wrong rates to compute the wear and tear allowances, which is surprising because the relevant rates for capital allowances are always provided in the examination paper. So students are encouraged to make use of the taxation table which is provided in the examination paper to avoid using the wrong rates when computing capital allowances. Okay. Then also, students normally also make a mistake. Students also make a mistake of using the income tax value of an asset when computing the capital allowances instead of using the original cost. Capital allowances are always computed using the original cost. You don't use the income tax value to compute the capital allowances. Another challenge is dealing with the disposal of assets. Okay, so in a year that an asset is sold, you don't compute the wear and tear allowance. In the year that an asset is sold, you compute either a balancing charge or a balancing allowance by comparing the income tax value of that asset with the disposal proceeds restricted to the original cost, where the disposal proceeds exceed the original cost. Okay, then other challenges in as far as capital allowances is concerned, in as far as computation of capital allowances is concerned, is that students sometimes will restrict, when we are dealing with a company, a student will restrict the capital allowance are available to the private use of an asset, where an asset is being used partly for private purposes, partly for business purposes. You'll find that a student may restrict the capital allowance claimable to the business use when you are dealing with a company. Okay, remember that when we are dealing with a company and there is an asset which was used partly for business purposes, partly for private purposes, the capital allowance is still claimed in full without restricting it. However, if you are dealing with an individual, a sole trader, and this sole trader had private use of a business asset, then you are not permitted to claim the capital allowance in full. You restrict the capital allowance to the business use of that particular asset. Another area of weakness is dealing with VAT. There are certain questions which include VAT when we are dealing with capital allowances. Sometimes the examiner may give you the cost of those assets at their VAT inclusive values. Students normally face challenges when dealing with such questions. The general rule, whenever you are dealing with capital allowances, in a situation whereby the figures or the values of the assets have been stated at their VAT inclusive value, is that capital allowances must always be computed using the VAT exclusive value. You don't use the VAT inclusive value. The only exception to that rule is where you are dealing with an asset on which VAT is not recoverable. On such assets on which VAT is not recoverable, you use the VAT inclusive value to compute capital allowances. But in all other cases, always use the VAT exclusive value to compute capital allowances. Okay. Then, apart from having challenges in computing capital allowances on implements, plant, and machinery, students also face challenges when it comes to computing capital allowances on industrial buildings. Okay, they fail to determine the qualifying expenditure for industrial building allowance purposes. Again, they will use wrong rates in computing the industrial building allowances available. Okay, so we have this example which we are going to use to demonstrate some of the do's and don'ts in as far as computing capital allowances is concerned when it comes to examination questions. The question reads, at 1st January 2020, XYZ PLC, a manufacturing company, had the following assets. So you have been given the original cost of those assets. We have manufacturing equipment which was acquired at an original cost of 400,000 kwacha and having an income tax value of 200,000 kwacha. The second asset we have been given in this question is the delivery van. Now, the delivery van was acquired at 70,000 and has an income tax value of 35,000. Then we have a motor car which had an original cost of 100,000 with an income tax value of 80,000. We are told that the motor car is used on a personal to order basis by the managing director, whose private use of that vehicle is 40%. So the requirement here, okay, even before we go to the requirement, we have also been told that during the year, this company sold some fixtures and fittings. For the fixtures and fittings were sold for disposal proceeds of 85,000. Then the requirement is to compute the capital allowances claimable by the company in that particular tax year. Okay, so what is important here is, first of all, to identify what type of taxpayer are you dealing with. Am I dealing with a company or am I dealing with a natural person, an individual? So in this question, the first sentence is saying at 1st January 2020, XYZ PLC. So XYZ PLC is obviously a company. We are not dealing with an individual. After we have established that, then we can compute the capital allowances. So on the manufacturing equipment, we are going to use the original cost of 400,000 kwacha. And you know that for implements, plant, and machinery used directly in manufacturing operations, we apply the rate of 50%. For a delivery van, you know that a delivery van is a commercial motor vehicle. It is not a non-commercial motor vehicle, and therefore you know that the relevant rate at which the capital allowances will be computed will be 25% as well. For the motor car, a motor car is a non-commercial motor vehicle, and therefore the relevant rate to apply is 20%. So that when we work out the solution practically, as you can see there, for the manufacturing equipment, it is at 50%. So what is important to note here is that you do not use the income tax value, okay? So you do not use the income tax value brought forward of 200,000 to compute the capital allowance. You use the original cost of 400,000, and the capital allowance, once you apply 50% to 400,000, will give you 200,000. Okay. So the other asset this company had was the motor car. So the motor car was acquired at a cost of 100,000 kwacha. So like I mentioned earlier on, a motor car is a non-commercial motor vehicle, and therefore the correct rate to apply is 20% and not 25%. The common mistake by most students is to claim the wear and tear allowance at 25% as if the motor car was a commercial vehicle. A motor car is a non-commercial motor vehicle, and therefore the appropriate rate to use is 20%. Secondly, you use the original cost of 100,000 kwacha to compute the wear and tear allowance and not the income tax value brought forward, which was 80,000 kwacha. Thirdly, you are going to claim the capital allowance in full because the taxpayer we are dealing with is a company and not an individual. If you recall, the question said this asset, this motor vehicle, was being used partly for private purpose because it was given to one of the directors on a personal order basis. Therefore, you will still claim the capital allowance in full. You are not going to restrict it to the business use of the motor car. Okay. Other weaknesses when it comes to this particular topic, we are looking at the taxation of individuals, companies. Other weaknesses include the use of wrong rates. You are taxing a company, but you are using the graduated tax bands for individuals. Similarly, you are dealing with a company, we are dealing with an individual. Instead of using the graduated tax bands which apply to individuals, you tax that particular individual using the company income tax rate of 35%. Always use the tax tables which are provided in the examination paper. Okay, another topic where students normally face challenges when attempting this paper include dealing with basis periods and basis of assessment. Okay, students faces challenges such as failing to determine the basis periods using the current year basis of assessment as well as the preceding year basis of assessment. They fail to deal with basis of assessment when dealing with a business which has stopped trading. They also fail to apply the commencement rules when dealing with a business which has started trading. They also fail to deal with the situations whereby a company has changed its accounting period. What are you going to use as the basis of assessment in that tax year when the company changed its accounting period? Taxation of mining operations is another topic which is answered poorly in examinations. What are the major challenges in this particular topic? Again, students will fail to distinguish between taxable, the students will fail to make distinctions between allowable and disallowed expenditure. They will fail to deal with capital allowances when dealing with expenditure incurred by a mining company in the mining township. They fail to deal with mineral royalty tax, failing to compute mineral royalty tax. They will fail again to use the correct rates when computing capital allowances on implements, plant and machinery used directly in mining operations. Another challenge is failure to deal with loss relief for mining companies, and finally, on this particular area, again using the wrong rates when computing the amount of company income tax payable by a mining company. Now, when it comes to mining losses, this is one area which is normally poorly performed. So we have an example here to demonstrate how you are supposed to deal with mining losses in an examination context. So we have an example there. The example reads, Mangochi Mining Company involved in industrial mining operations incurred a loss from mining of $9,560,000 in the tax year 31st December 2019. And the average Bank of Zambia to US dollar exchange mid rate was 5 kwacha 14 ngwe. During the year ended 31st December 2020, Mangochi Mining Company earned a tax-adjusted profit from mining of $3,350,000, and the average Bank of Zambia US dollar to kwacha mid exchange rate was 6.35 for the year ended 31st December 2020. So here, the examiner wants us to compute the final taxable mining profits for Mangochi PLC, as well as to show the amount of loss, if any, which will remain unrelieved at the end of the tax year. So how do you deal with this such a question? The first thing is to compute the taxable mining profits. In the context of this question, we have already been given the taxable mining profit for 2020, because the question is saying during the year ended 31st December 2020, Mangogochi Mining Company earned a tax-adjusted profit from mining of 3,350. In an exam context, that wouldn't have been given to you. You would have needed to calculate that first before you can deal with any loss relief. Now that we have to, given that in this question we have the profit figure, we can just proceed and deal with it. So the first thing is, before you can relieve any loss brought forward, the first step is to index it. Okay, so the first step is index the mining loss brought forward from an earlier year. The indexation formula is always provided in the examination paper. So you use that indexation formula to index the mining loss first before you can offset it or relieve it. So the formula says R2. Of course, R2 stands for the mid-exchange rate, ruling in the year in which you are claiming the loss relief. In the context of this question, R2, which is represented by the exchange rate, ruling in the year in which you are claiming the loss relief, when you look at this question, they have said the average Bank of Zambia US dollar to kwacha mid-exchange rate was 6.35. So that is our R2. We get that figure and we put it in our formula there. R1 in that formula stands for the mid-exchange rate, average mid-exchange rate, which was ruling in the previous year. And in the context of this question, it was 5.4. Then you divide by R1, which again is 5.4. So that when you solve that particular equation, you get an indexed loss of 11,241,852. So that is the first step. First of all, index the mining loss. Once you have indexed the mining loss, what do you do next? You determine the amount of mining loss that can be relieved. Now, mining companies are not permitted to use all the taxable mining profits they have made in a particular year to offset a loss which was suffered in an earlier year. A mining company is only permitted to use 50% of the profits they have made in a particular year to offset a loss which was made in an earlier year. So, as you can see in this question, the loss which was incurred, or rather the profits which this company made in this particular year, were 350,000. But the mining or the tax law does not permit you to use the whole 350,000 to offset a loss you made in an earlier year. You will only be permitted to use 50% of that. Such that when we work this one out practically, of course, we have the indexed mining loss brought forward, which was 11,241,852. We are saying profits we made in the current year, tax year 2020, the profit was 3,350. We can't use the whole profits to offset the loss suffered in an earlier year. We are only permitted to use 50% of that, such that when we say 50% of 3,350, that is giving us 1,675,000. So out of the total indexed loss of 11,241,852, which was incurred in this particular tax year, the amount which we are going to offset will only be 1,675,000. At the end of the tax year, we will have 9,566,852 loss remaining unrelieved. Step 3. Now that we have determined how much of the loss can be offset, we can now compute the final taxable profits for this particular company. So, you recall that we were told in the question that the mining profits for this company for the tax year 2020 was 3,350. And from the previous working step 2, we have just established that out of the total loss incurred by this company, we can only offset 1,675. So from the 3,350, when we deduct 1,675, the final taxable income for Mangochi company will be 1675. Let us move on and now look at taxation of financial institutions. What specific challenges do students normally face in this particular topic? Again, failure to distinguish between allowable and disallowed expenditure when computing taxable business income for a commercial bank. Again, use of wrong rates to compute capital allowances, use of wrong rates to compute the income tax payable. So you will see that these challenges are repeated throughout all the other topics, meaning that for you to perform well in this particular paper, you need to make sure that you know these areas thoroughly well. Okay, in fact, those are the main challenges in as far as computing taxable profits for financial institutions. So those are the main challenges which students normally face when dealing with taxation of financial institutions. Now, the same challenges are repeated when dealing with taxation of farming operations. Students will still fail to distinguish between allowable and disallowed expenditure, using wrong rates to compute capital allowances, use of wrong rates to compute the income tax payable, both by companies as well as individuals. Financial arrangements is another topic which students find particularly challenging when in examinations. So financial arrangements is another topic where students face challenges in examinations. What are the challenges when it comes to this particular topic? The students normally fail to explain the tax implications for a company, as well as for a company for using different sources of finance. Okay, they will also fail to explain the tax implications for investors. For investors investing in equity or debentures or bonds of an entity. Students also fail to explain the taxation implications for a business of the various financing options for assets. They will fail to explain the taxation implications, for example, of using a finance lease to finance the purchase of an asset. They will fail to explain the tax implications if a company acquires an asset via a hire purchase arrangement. What will be the tax implications if an entity were to acquire an asset using an operating lease? What if it was sale and lease back? What will be the tax implications? So they fail to explain the taxation implications associated with these various forms of finance which a business may use to acquire capital assets. Now, what students normally do when asked a question, for example, explain the tax implications of using a finance lease, an operating lease, acquiring an asset under hire purchase, what students will normally do is to explain the general advantages and disadvantages of using these different forms of finance to acquire capital assets. They will explain the advantages, the disadvantages. They will even describe what a finance lease is, what a hire purchase arrangement is, which is not what the examiner is looking for. For taxation purposes, the examiner is specifically looking for the taxation implications. He's not looking for the advantages or disadvantages. The question is, the examiner is not looking for you to recommend which option is the best. The examiner wants you to bring out the tax aspect. What are the tax implications? Okay. So let us look at an example so that I demonstrate practically how you are expected to answer these types of questions. So we have that example. The question reads, explain the tax implications for a company of using equity and debt as sources of finance. Okay, so what are the tax implications, or explain the tax implications for a company of using equity and debt as sources of finance? So we start first of all with equity because firstly, this question wants us to explain the tax implications of using equity for a company, and secondly, to also explain the tax implications of using debt for a company. So we start with equity. What are the tax implications when a company uses equity as a source of finance. You know that whenever a company raises finance by issuing equity or selling shares, it is tying itself to dividend payments. There will also be some issue costs which the company will incur. So the tax implications will be on the issue costs which the company will incur. The tax implications will also be on the dividend payments it has committed itself to pay. No wonder when you look at the solution, we are saying the tax implications of using equity will be that the issue costs which the company will incur on issuing the shares are not allowable for taxation purposes. Secondly, the costs which the company incurs in making dividend distributions will also not be allowable. Thirdly, the company would have tied itself to pay dividends in future on those shares. So the dividends which the company will be paying in future on those shares to the shareholders will also not be allowable. So that is how you answer that question. You go strictly or directly to the taxation implications rather than explaining the advantages and disadvantages of equity as a source of finance for the company. When it comes to debt, when a company issues debt, it will incur, first of all, the costs in issuing those bonds. Then secondly, the company will tie itself to making interest payments on those bonds it has issued. And therefore, the taxation implications will also be on the same. Number one, the issue costs will be allowable as long as the finance is not for capital purposes. But if the finance is used for capital purposes, then the issue costs will not be allowable. Similarly, the interest on the bonds or on the debt will be allowable as long as the debt is not for capital purposes. That is to say, the company is not raising the debentures or the bonds to finance capital expenditure or acquisition of capital assets. The interest will be allowable. But if the bonds are being used to finance capital expenditure, then the interest in that case will not be allowable. We look at another example on the same, because when it comes to these financial arrangements, sources of finance, the examiner expects you to explain, first of all, the tax implications for the company which is raising the finance. Then also, you should be able to explain the tax implications for the investor, someone who is investing in bonds of a company, someone who is investing in shares of a company. What would be the implications for the investor? So we want to illustrate that by means of this example. Explain the tax implications for an investor arising from investing in ordinary shares of an entity. So, when someone buys ordinary shares of a company, okay, what do they get in return? When someone buys shares in a company, there are two ways they can make income from that investment. Number one, they will be getting the dividends which will be paid to them. Number two, they can sell the shares to another person and make a gain. So even the tax implications will be on those two events. So for an investor, when an investor buys or invests in ordinary shares of a company, number one, we have said they will be getting the dividends. So how will they be taxed on the dividends they will be getting? It depends. If that company is listed on the Lusaka Securities Exchange, then those dividends or the rate of withholding tax which will apply to those dividends will be 0%. But if the shares are coming from a private company, or if the investor has invested in a private company, private limited company, a company which is not listed on the Lusaka Securities Exchange, then the rate of withholding tax will be 15%, and it will be a final tax. The second way an investor may generate income from an investment in form of shares is by selling the shares. So what happens if that investor decides to sell the shares? Again, it depends. Is the company listed on the Lusaka Securities Exchange? If that is the case, then no property transfer tax will arise, because a property transfer tax does not arise on the sale of shares in a company which is listed on the Lusaka Securities Exchange. What if the company is not listed, it is a private limited company? then if the investor sells those shares in a company which is not listed on the LUSE, when an investor sells shares in a private limited company, property transfer tax will arise on the realized value of the shares at the rate of 5%. So those are the points you're expected to bring out when a question comes in that manner. We have another example, okay? Because we are saying when it comes to sources of finance, you should be able to explain the tax implications both for the company on one hand, the company which is raising the finance, and also for the tax implications for the investor who is investing in the company on the other hand. So we have another example. Explain the tax implications for an investor for investing in bonds of an entity. When an investor or when a person invests in bonds, buys bonds or debentures of a company, how do they generate income from such an investment? Because taxation is all about taxing income that a person has generated. So when someone invests in debentures or bonds, there are two ways they can generate income from such an investment. The first one is through the interest that the investor will be getting from those bonds. Secondly, just like shares can be sold on the stock exchange, bonds can also be sold on the stock exchange. So, firstly, when it comes to the interest, when the investor will be getting, what will be the tax implications? It depends. Is this investor an individual or is this investor a company? If the investor is an individual, then the interest will be subjected to withholding tax at the rate of 15%, which will be a final tax. But if the investor is a company, the interest income will still be subjected to withholding tax at the rate of 15%, only that it will be a final tax. Secondly, what happens if the investor decides to sell those bonds? The tax implications will be that no property transfer tax will arise, regardless of whether the investor is a company or an individual. Why? It is because bonds do not meet the definition of property under the Property Transfer Tax Act. Okay, seeing that the performance of students in this particular topic is always poor, we have included a number of examples so that you know how to tackle the types of questions which come on this particular topic. So we have another example. Explain the tax implications for an entity of acquiring capital assets under a hire purchase arrangement. So what you are expected to say, or the points you are expected to bring out when tackling this kind of question include: capital allowances are claimable on the costs, interest payable under the hire purchase arrangement is allowable. Okay, we move on to another topic. This time we'll look at tax planning for groups. When it comes to tax planning for groups, major challenges are faced by students include failing to explain the tax treatment of entries into and exits from a group. What are the tax implications if during the year a subsidiary, a group of companies purchased another subsidiary, and therefore that new subsidiary joined the group? That is what we mean by group entries. Or what happens if during the year a group of companies sells one or two of its existing subsidiary? That is an exit. Secondly, students also fail to deal with VAT for groups. Okay, now that we have looked at some of the weaknesses which students face when sitting for this paper, we can now move on and look at some of the techniques which you can use when dealing with the exam questions, which will ensure that you perform well in this particular paper. First of all, you need to know that this paper contains 4 compulsory questions of 25 marks each, drawn from those key areas of the syllabus which I've already highlighted. So there are 4 compulsory questions, each with 25 marks, and they will cover all the core areas of the syllabus. So meaning that you cannot afford to concentrate or just study one or two topics hoping to pass. For you to perform well, you have to ensure that you cover all the key areas of the syllabus. Okay. A key technique which will ensure success is to make effective use of reading and planning time. What are some of the things you should do in that 15 minutes of reading and planning time? Okay, you need to carefully read and understand the question requirements. And for taxation purposes, you must be, as you are reading through the question, identify what type of taxpayer am I dealing with. Am I dealing with an individual? Am I dealing with a company? Why is that important? It will determine the rate, the tax rate which you are going to use to tax that particular taxpayer. Also identify, if it is a company, what type of company am I dealing with? Is it a company engaged in mining operations? Am I dealing with a company engaged in farming operations? That again is important, because you know that companies engaged in mining are taxed at 30%. Companies engaged in farming are taxed at 10%. So it is always important, as you are reading the question, you clearly identify, number one, the type of taxpayer you are dealing with, individual or a company. If it is a company, go further. What type of company am I dealing with? Is it mining? Is it farming? Or is it just an ordinary company? Why is that important? It determines the rates you are going to use to tax that taxpayer. Then also, as you are reading, pay particular attention to the dates, especially when you are dealing with basis periods, as this will affect the types of computations you are going to make. Okay? Then also highlight the instructions. Pay attention to what the examiner wants you to do. Is it to explain? Is it to compute? Is it to discuss? Is it to advise? Or is it to evaluate? Very important, because if you ignore the command verbs, then you are not going to address the requirements of the question. Okay, then additionally, you can highlight or mark any other information which you think may play a key role in answering specific requirements. For example, when you are dealing with a question of computing taxable business profits, as you are reading the question, you'll be able to identify, to say this expense is allowable, the other expense is not allowable. So right away you can even tick them. You can tick the disallowed items, so that when it comes to answering the question, you already know which items you are looking for. So identify the allowables or disallowable if the question is dealing with computation of business profits. If it is a question on VAT, as you are reading through the information, you'll be able to tell or tick, this item is exempt, this item is zero rated, this item is standard rated, so that even as you start doing the actual question, you already know the rate at which you are going to compute the value added tax. Then also importantly, also decide the order in which you are going to attempt the questions. Attempt the easiest question first. Okay, there is no rule which says you must always start with question 1. Okay, identify which one is the easiest question. You attempt that, because it guarantees you that you already have some marks. Okay, and it guarantees you some easy marks right away and gets you into the flow of the exam. Allocate. It is also important that you allocate the length of time you will spend on each question and draw up a timetable. Okay, because sometimes students tend to spend too much time on a question they are found to be so easy. 2 hours on one question which they found to be too easy. By the time they are finishing that question, they have realized to say they have run out of time. So it is always important that you plan your time. Okay? So a useful way is to allocate 1.8 minutes per mark. Where am I getting the 1.8 minutes? It is 100 over, your exam is 3 hours, which translates to 180 minutes. And you are looking for 100 marks. So 180 divided by 100 gives you 1.8. Such that for a 25 mark question, it it is simply 1.8 times 25. You know that you have to spend a maximum of 45 minutes. Or you can simply say 25% of 180 max. So that gives you 45 minutes. Idea, in fact, use 1.5 minutes per mark. When you use 1.5 minutes per mark, it leaves you enough time at the end of the exam to go through your work. Okay, so it is important that you allocate the length of time you are going to spend on each question. And you have to be disciplined enough to spend that amount of time. For this particular paper, all questions are 25 marks. So you cannot spend more than 45 minutes on each question. So once you start writing, make sure that you keep an eye on the clock. And like I've said, make sure that you spend the right allocated length of time on each question. Presentation is also very important when it comes to D3 business taxation, because no one is going to mark work which is poorly presented. If the examiner cannot see, cannot follow what you are doing, then they won't award you marks, even if it is correct. So presentation is very important. Number one, your handwriting must be legible. Number two, we are saying your answer should be well structured. Give thought to what format you are going to use. Okay? So give thought to what type of format you are going to use. And use standard workings as much as possible. For example, if a question asks you to compute taxable business profits, there is a way we always present such kind of questions. Of course, you start first of all with the net profit as per accounts. You add back the disallowed. Then you deal with the income included in accounts, which is not taxable. You end with the capital allowances. So use standard workings, because there is a standard way that we present most of these computations for this particular paper. So why is it important to use a standard working? We are saying a standard working helps the marker to locate the marks easily, and it helps you to work your way through the figures in the question in a methodical and time-efficient way. Okay, then it is also important that your workings, okay, you include all your workings in your answer. You cross-reference them appropriately. The marker, the examiner, must be able to see where each and every figure is coming from. That is also important because sometimes you could have done the working properly. Okay, the computation was correct. But when you are writing the final answer in your final solution, you make a mistake. If you have not presented any working, you will lose all the marks. But if you have included your workings, properly cross-referenced, then you still get some marks. For discussional questions, okay, so some questions are discussional in nature. Make use of headings, sentences, paragraphs, bullet points, and tables to present your answers in a clear and concise manner. This makes it easy for the markers to see your points and award marks appropriately. And write your answers in short, punchy sentences. Paragraphs which are too long or which lack headers don't help the markers to identify your main points. In other words, make it easy for the marker to see the points you are writing down. Then, there are some questions which may require you to present your answer in a particular format. For example, the examiner may say, write a report, write a memo, or write a letter. Make sure that you present your answer in the format that has been requested, because such questions gives you an opportunity to earn some easy marks, because the marker will award marks for you for using the right format. If he has asked for a report, present a report, because just for presenting your solution in the format of a report, you have used the correct format. You will get some marks there. Okay. Then, always show which question you are attempting clearly, and remember to use black or blue ink. Don't scatter your answer parts from the same question throughout your answer booklet. You started on the first page of your booklet, then the final answer is at the end. If you are stuck with a question, it is better you leave some space in your answer booklet and you return back to that question later. And most importantly, keep moving on. Okay, it is important that in an exam situation, you may not get each and every part of the question correct. So when you get stuck, just move on rather than wasting time. So we have come to the end of the presentation, examination techniques in D3 Business Taxation.